Welcome to Trading Lounge and the US indices for the 24th of September. So we've been looking for a wave 4 to pull back here. So that should pull back to the 38.2% retracement level thereabouts, or the wave 4 of 1 lesser degree, but that's even further down. But because we've got an extension in this structure here, we can look towards the top of this wave 3 here. So yeah, 31 say 50 here for this. Now the other point here too is that we've got this coming down as an A and a B and a C wave here, and that looks okay, and we should turn up from this point. Now we need to get some evidence of a move up here first to confirm that. So we need an impulse wave off the low here, because this structure here can be counted in different ways here. So we can just take a quick look at some of those. So this is another way that it can be counted in 3 waves to the upside. So this is why we really need to be very careful about what we do. Once we get this last 5th wave here, finishing here, we need to see an impulse wave to the upside in this case. So that's still the same count. Yeah, not to worry too much. We'll just stay with what we've got here. But you've got the message that there's 2 things here really. Is wave 4s can get rather complicated. That's one. So that also means that that the whole move down through here may just be the A wave, and we come back up to 50-60% up to the 3400, the old high, and this is what this correction is really all about, this correction here, because the old high is at 3400. The distance above is normally the distance below in that swing range, and then the 34 becomes the real pivot point, a balance point in this whole correction. So it can just have the ABC pattern here to wave 4 and then push up straight up from that point. Or it may just come to the 34 here and then have another wave C to the downside here. And in fact, being in 3 waves here, it could actually come back up closer to the old highs here in a flat correction, and then come back down here in 5 waves. So 3, 3 and 5 as well. So there's a lot to be taken in here with wave 4s. They're not, don't get disappointed, don't overtrade. It's not, they're forced to be reckoned with, wave 4s. So we just really, they can get rather complicated. So take the money off the table where you can, use stops, all those sorts of things. But in a nutshell, if everything goes according to plan, well, then we should see this move down. Well, it doesn't have to move down to the 31.46 or whatever it is, 50. The 32 here is the next real support here, the 3200 here. So if it was going to go below the 3200, then group 2 would be involved in that. So if we look at the hourly chart here, group 2 is 65, 72 and 80, so they would come in under the first levels here, because when we're talking about 32 here, we can also put in group 1, which is 10, 20 and 30, and then below that is 80, 72 and 65, and that range there tends to be the swing range for the price action at the closest largest number here. While we're also here as well, on regards to our trades, we've been stopped out here. We've done all the right things, unfortunately. But we've managed to get a few trades in, take a bit of profit on the way down. The wave 4 here just swung back too high and sat above the level there, so we had to move out at that particular point. It's just the way the cookie crumbles, a bit unfortunate actually, but anyway, we did what we did and we've made what we've made, and that's that, and now we need to get on with the job. So the move down through here, I didn't call a short trade for that, of course, but hopefully that you may have been short under the retested resistance of the 3,300 area through here. That would become more prominent on a 15-minute chart or tick chart as we use. But the main point here now is that if you are short, 32 is the target, and we're looking for 5 waves down in this structure here. So we'll just go to the 15-minute chart. So first of all, the correction to the upside, we can count as 1 and 2 and 3 and 4 and 5 here, and then the B wave here, then 1 and 2 and 3 and across for 4 and up for 5 here for wave C of 4 here. And then looking here, if we can look a little bit closer, we've got 1, 2, 3, 4, 5 here, very neat and tidy. The retest here, this is where you could have shorted it from. If the retest is on lower volume than the previous move down through here, then you'll know that it's corrective. Otherwise, you'll also see this on a smaller scale in 3 waves to the upside. So you can short it not at the low here, but under the second low, the B wave here. It's hindsight, but it's just worth noting. So that's just the market comes down, bounces off, comes through, goes back up. When it goes back up, it will be a corrective wave in 3 waves. It will be on lower volume than the move down from that point. So being on lower volume, you'll know that it's corrective because corrective patterns are on lower volume. And then that B wave there is a more refined entry point if it's breached to the downside as such, where we normally take this here, but we take both of them, of course. But anyway, just going over that it's always good to continue learning. So it does appear that from here to here that we pretty much have 5 waves as well. So we'll be looking for a 38.2% retracement level that can come back up to this height actually. So I'm just assuming that's done, but I'll need to check that on a tick chart. But if there is another low there, then you'll take that from wherever it needs to be taken. And yeah, so it could reach that high before coming down and making, I mean, looking at these structures here, then it probably only come back up to this area through here and then have 5 waves into the 32 and then bounce strongly off that point there. So let's just clean this up a little bit. So you could buy it on a small position. You know, if you normally trade, let's just say 3 contracts, well then just buy 1 contract on the bounce here. And then what you'll have to manage that trade, of course, but then what you're actually looking for here is if that's 5 waves in this move here, then I'm just making assumptions here. So wave 1 and 2 and 3 and 4 and 5. If you can recognize those, that's fantastic. Then you'll get some sort of correction that may only come back 40%, may come back 50%, may have a deep correction, you know, 60 or 70 odd percent. You just don't know. But that particular, if you can identify 5 waves here, then you can buy the low coming back to the 50-60% retracement level there. So we could put that in because that's the previous move at that point. So, but you'll need to adjust that a bit. So I'm just taking to the 32.50 area through here. I'm just thinking ahead and trying to get us in building positions in this area here. So, I mean, there's still a lot of risk in all of this, but having 5 waves here, that's our saving grace, really. That helps us get, because if we get 5 here, then after an ABC correction, we're going to get another 5. So this next 5 here, what we've got to look for here is we actually need it looking a little bit stronger than the first wave here. And it should take us all the way up to this next level here. So the idea would be to get a few positions in here without overdoing it, of course. The markets will always be there. You don't need to work outside the leverage or your position sizing and so on. So 1 position, wait for 5 waves, wait for an ABC correction. If you see only if you see 5 waves, then you can move in on this low. and you can move in on this one and this one. That will give you 4 small positions at that particular point. And then you really want to get some buffer at that point. We should move up strongly in a third wave if everything goes according to plan. So you could also add as well, but we can expect some sort of correction at the 33 there before moving up, which will also give you an opportunity to move in there as well, and that would be better placed at that time. And the reason it'll be better placed for is because once that top gets taken out, then you can move your stop up to that low here, and then that's all locked in at that point, and then you start building your next set of positions. Alrighty, I think that's just about it really. I just really wanted to keep it simple at this particular point in time. Now obviously stocks are going to pretty much create these moves in the off hours. So I was looking at Alphabet here. We've been tracking it, as you know. So wave A and B here, and then we've been counting through all of this here as 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave. Fourth wave pulling back up roughly to the 38.2. I'll just sort of check that here actually, yeah, no, that's nicely sitting in there. So it just helps me confirm that's the right count. You know what I mean? It's not like, oh wow, it hit it right on there, because sometimes it falls short, sometimes it goes above, but what it does do is it just helps me confirm that it is a fourth wave, and then we can move on from that, and then we can start looking at this structure here for this. So I can see parts of it. I can see that this is probably down for 1 here and back for 2, then down for 1 and back for 2, and down for the third wave. There's still more to go here. There's going to be support. There's obviously going to be support at the 1400 and the old low there. So that's got to play out there, but it should drop a bit lower into this space here in the next session. But just watch for the turn on a lot of these stocks, you know. This is Apple here. So with Apple, you can go long again. This might make a new low here, it may not. This could be counted up as an ABC correction, but you can also squeeze 5 waves out of it. But the main point here is that you could go long on 110 here with a classic trading levels pattern here, sitting on its support. If the 110 gets support again, you can go long from that point. So all the stocks that we've been looking at are basically doing the same type of thing, you know. We'll just have a look at Amazon as well. So Amazon, yeah, I've sort of cut the third wave off a little bit short here. The A wave, the B wave is all good. Then 1 and 2 and 3 and 4 and 5 we counted yesterday. So we may not see a new low here in this case. It's probably a good case for looking at this as 1 and 2 and 3 and 4 and 5 here, and then coming back here for, well, we're pretty much at that space there. So obviously this, because this may be an impulse wave here, we would probably consider this a leading stock to the upside. So any strength that you see over here for this would be an A wave here, B wave here, then 1 and 2 and 3 and 4 going here, and 5 dropping into the 29.72 area there, and then moving up from that point. So yeah, you can look to go long on that if you see strength. I just want to say something about the levels as well while we're here, if that's cool, because let's just say, for example, that the market, this is a tick chart, so I can't draw on that side, so I have to come over here and draw on this side. But it's just a lesson here, really. So it's just about the stop. So if the market comes up hits the level, does all the right things, a classic trading level pattern, the first high above the level, then the ABC correction here, and then it starts to move up here. And you know, we look for long trades here, we can bring that down to the second position here, and most of the time we can actually get a better position in here on the third one, on this leg here. But I have to say, once that's triggered here, then the stop needs to go under the level here, right? It's as simple as that. And then you can organize your position sizing. Once you know your entry and your stop, then you'll know how many shares to buy within your 1% risk. And I mean, if you're trading, say, over 50k, well, then you sort of reduce that 1% risk, you know, scale it down to 0.5% of up to the 100,000. But anyway, I don't talk about stops that much, but if you're above a level and the market comes down through the level, then you need to get out. The other way you can do it to refine things is just wait for that first move down and the retest there, and then put your stop under here, as you would put your short trade at that point there as well. I always say, if you don't know what to do, is to take the next logical step. So you really need to think unemotionally and out of the box on these matters, but understanding price as well. All the numbers are just 1, 2, 3, 4, 5, 6, 7, 8, 9. So 1 is the strongest number and 5 is the second strongest number. So you look between 1 and 10 and you'll work out straight away, do you put a stop above 5 or below 5? So it might be between 810 and 820. So 15 would be the main point there, but you wouldn't put the stop 1 point under the 15 at the 14, because that's just going to get stopped out, you know, so you need to come a couple of points lower. So most stops on the long side will be at ending in the number 6 or in the number 2. Alrighty, thanks for tuning in. Cheers.